Money makes the world go round. And in 2025, holding the right currency could be the difference between protecting your wealth and watching it slowly erode. Global debt is at record highs, inflation is still haunting many economies, and central banks are playing a delicate balancing act. So the big question for investors and ordinary people alike is simple. What are the best currencies to hold in 2025? To answer that, we need to look at three things. First, the strength of the economy behind the currency. Second, the stability of the government and central bank. And third, the global demand for that currency. Because a strong currency isn't just about interest rates or inflation. It's about trust. Trust that the country will manage its finances responsibly. Trust that the government won't default. And trust that global investors will continue to use that currency for trade, investment, and savings. So let's dive into the currencies most experts consider safe or even profitable to hold in 2025. At the top of the list, of course, is the US dollars. Love it or hate it, the dollar remains the world's reserve currency. It makes up more than half of all global foreign exchange reserves. It is used in international trade, commodity pricing, and as a benchmark for almost everything. Even when America faces political turmoil or massive debt, investors still run to the dollar during uncertain times. That tells you everything you need to know about its dominance. But here's the catch. The dollar is strong, but it is not invincible. America's debt is rising at an unsustainable pace. Inflation is under control for now, but it is far from gone. And with elections creating political uncertainty, some investors are nervous. That's why diversification is key. You don't want to hold only dollars. You want to mix them with other strong global currencies. The next big one is the Swiss franc. If there were ever a safe haven currency, this is it. Switzerland is politically neutral, economically stable, and highly trusted around the world. During global crises, money floods into the franc. That demand pushes it higher, which protects investors holding it. In 2025, as geopolitical risks remain high, the Swiss franc is one of the best bets for wealth preservation. Then we have the euros. Now, the euro has had its ups and downs. Debt crises in countries like Greece, Italy, and Spain have sometimes rattled confidence. But the Eurozone as a whole is still one of the world's largest economies. The European Central Bank has been aggressive in fighting inflation, and the euro remains a major trading currency. For diversification, holding euros makes a lot of sense. It is not as safe as the Swiss franc, but it has global relevance. What about the Japanese yen? Historically, the yen has been a safe haven during crises. Investors would flock to it when markets turned risky. But in recent years, Japan's ultra-low interest rates and massive debt levels have made the yen weaker. However, in 2025, things may be shifting. The Bank of Japan has hinted at adjusting its long-standing policy of near-zero rates. If that happens, the yen could strengthen, making it a smart currency to hold. Another currency to watch is the British pound. The UK has faced challenges since Brexit, from trade disruptions to political instability. But the pound has shown surprising resilience. The Bank of England has been aggressive in fighting inflation, and London remains one of the world's financial capitals. For investors looking to diversify into a major liquid currency, the pound still has a strong role. Now, let's talk about commodity-linked currencies. Currencies like the Canadian dollar, the Australian dollar, and the Norwegian krone are tied closely to natural resources. When commodity prices rise, oil, gas, metals, and agricultural products, these currencies often strengthen. In a world where supply chains are shifting and energy demand is unpredictable, these currencies can serve as a hedge. Take the Canadian dollar, for example. Canada has stable governance, close ties with the United States, and vast natural resources. If oil prices rise, the Canadian dollar usually benefits. The same is true for the Norwegian krone, which is backed by Norway's massive energy exports and sovereign wealth fund. And Australia, with its abundance of minerals and agricultural exports, has a currency that tracks global demand for raw materials. Another interesting play is the Singapore dollar. Singapore is one of the most stable financial hubs in the world. Its currency is tightly managed by the Monetary Authority of Singapore, which focuses on keeping inflation under control. The Singapore dollar isn't as widely traded as the United States, dollar or euro, but it is a safe, reliable currency for investors who want exposure to Asia without the risks of China. Speaking of Asia, what about the Chinese yuan? China is the world's second largest economy, and it has ambitions for the yuan to become a global reserve currency. More international trade is being settled in yuan than ever before. However, there are risks. China's economy is slowing. Its property sector is in crisis. And the government tightly controls the currency, which limits trust among foreign investors. For 2025, the yuan may not be the best currency to hold for safety, but it could be worth holding in small amounts if you believe China will successfully expand its influence in global finance. Let's not forget emerging market currencies. Countries like Brazil, India, and Mexico have growing economies and strong demographics. Their currencies can deliver big returns if their economies grow faster than expected. But here's the trade-off. They are also much riskier. Emerging market currencies are highly volatile, and political instability or inflation can crush their value overnight. So, while they can play a role in a diversified portfolio, they're not the safest bets for 2025. So, what does the ideal currency portfolio look like in 2025? Think of it like building a safety net. You want a strong foundation with stable, globally trusted currencies. That means holding US, dollars, Swiss francs, and euros. Then you want some diversification with currencies like the pound, yen, and Singapore dollars. Finally, you can add a small portion of commodity-linked or emerging market currencies for potential growth. This way, you protect yourself from shocks in any one region or economy. Because here's the truth. No single currency is perfect. The dollar is dominant but vulnerable to debt. The franc is stable but less liquid. The euro is strong but politically complex. The yen has potential, but faces demographic challenges. The pound is resilient, but tied to Brexit uncertainties. And commodity currencies rise and fall with global demand. That's why smart investors spread their risk. Holding multiple strong currencies ensures that when one weakens, another may strengthen. It's about balance. It's about protection. And it's about preparing for an uncertain world. In 2025, the global financial system is facing unprecedented stress. Debt levels are rising. Geopolitical risks are intensifying. And new technologies like central bank digital currencies are starting to emerge. But the fundamentals of currency investing remain the same. Stick with strength. Diversify across regions. And never bet everything on one economy. Because at the end of the day, currencies are more than just money. They're trust. They're confidence. They're the ultimate signal of how the world views a nation's stability. And in 2025, the best currencies to hold will be the ones that combine stability, demand, and long-term resilience. So don't chase fads. Don't gamble on untested currencies. Protect your wealth with proven safe havens. And diversify into strong global players. Because while the world is unpredictable, your money doesn't have to be. Choose wisely, and your currencies won't just protect you in 2025. They'll help you thrive in the years to come.